What's up, everyone? It's Scotty with MoneyVest. So I am traveling at the moment. I am back in India. I'm gonna be in Mumbai for about a few days, and then I'm traveling to Delhi to visit my family for a little bit. So wanted to, of course, record this market update because today is one of those days where the market kind of makes you feel alive, right? When the markets are selling off so aggressively, we've got the NASDAQ down almost 2%. S&P 500 down a little bit over 1.7% as well. You're seeing a lot of red in the markets out there, and volatility is up. So VIX is finally up quite a bit. It was up, I think, a little bit over 24 to 25% on the day, trading up to as much as 18 to 20 levels last time I checked. And this video, I really want to highlight some very important levels and what I'm personally doing moving forward. And if you want to get access to all the alerts and, of course, trade ideas and get access to all the members-only private videos, including all the trading view charts and trade ideas and everything else, link's going to be down below if you want to join and, of course, be a part of our MoneyVest community. And again, it's the best time to join, and the reason being because we do also have the beta launch coming out very soon. That's going to be for the moneyvest.com platform, and all the existing members will lock in that pricing forever, and you will be able to participate in the early access, the beta launch that we'll have, and provide us feedback on what we can change and do better. So link's going to be down below. We'd love to have you on board. There are limited spots left, and like I said, this discounted pricing will not be there forever. Once the global launch happens, that pricing is going to go away. So first things first, let's talk a little bit about what the markets are doing. I actually want to go over this reel as well on Instagram. This is from Bill Ackman, an interview. This is going to be more of a message that I want to break down in this video. But JP Morgan here down a little bit over 6% after reporting some good numbers, but of course comments from Jamie Dimon suggesting that inflation is going to be a little bit more stickier and more persistent than what we originally thought. And I've also mentioned that in my previous videos time and time again. A lot of the banks are doing not that great. A lot of them are actually down. So Wells Fargo reported earnings today. That's also selling off. We've got Barclays, we got Deutsche Bank, we got Ally Bank, HSBC, PNC, we got Trust Financial Corporation, we got SoFi Bank, we got Citigroup, even PayPal. Everything is selling off here on the day. Of course, JP Morgan with a massive gap down a little bit over 6%, trading down to $183, dragging the entire market lower with it. So if you come over and take a look at the NASDAQ, so IXIC, markets are still open right now. Since I'm in a different time zone, I'm not going to be up until market closes here. So I'm recording this video just about 30 to 40 minutes earlier than the close. But NASDAQ's down almost 2%, so definitely selling off. We're getting rejected at that resistance as we identified in our previous video. And of course, the S&P 500 also pretty brutal sell-off, making a new lower low. And this is exactly what I was afraid of. And down a little bit over 1.7%. So today's the day, folks. Today is the day. We are starting to see that selling pressure, and the reason why there's a smile on my face and the reason why I'm getting more and more excited is because if you know me, you understand that this is a buying opportunity. This is nothing but a opportunity for us to start being aggressive and dollar cost average, and of course start looking at the markets from a more discounted level perspective. And this is exactly what's covered in this Bill Ackman clip, which I'm not going to play because there's music in the background and I don't want to get a copyright strike, but I'll break down what his message is in this video. But before we do that, let's just break down exactly what's happening in the markets today. So JP Morgan shares declined more than 5% after the banking giant posted its first quarter results, of course, for the 2024 year, and earnings season just started. And the bank said net interest income, a key measure of what it makes through lending activities, could be a little bit short of what Wall Street analysts were expecting in 2024. And CEO Jamie Dimon also warned about persistent inflationary pressures weighing on the economy. Wells Fargo also slipping over 0.6%. Citigroup dropped over 2% after posting a revenue beat. And of course, the entire banking sector is selling off, not to mention the entire market is dropping pretty aggressively. And oil prices continue their rise on reports that Israel is preparing for a direct attack on Iran this weekend in what would be the biggest escalation of tensions in the region since the outbreak of the war back in last October. And US crude oil prices were trading well over $87 a barrel as well. So if you come over to crude oil, trading at just over $85 right now. They did get a spike up to over $87.60 intraday. And then of course rolling right back down to now just over $85 a share at the moment. Now, moving forward, we're getting further risk-off sentiment heading into the weekend. So this right here was from Rob Howarth, U.S. Bank Wealth Management, Senior Management Investor Strategist. And he mentioned, and I quote, "You are seeing there's a flight to safety trade with the dollar getting stronger, and we're seeing equities sell off." So again, we've talked about this before, right? I feel like every time we talk something about on our videos, the following day it ends up on the media. It ends up by somebody saying that, and it's an interesting concept because we've been talking about these things for quite some time. We've discussed how technically overbought this market is, how there is premium valuations, even on a risk-adjusted basis. It doesn't really make sense to be a buyer at those prices. And the reason being is because, again, if you look at the yields, if you look at the 10-year yields, in fact, in my yesterday's video, I specifically mentioned that it is actually quite surprising how strong this market is, despite the yields pushing higher, despite the increase in the dollar index, despite the increase in inflation. So we're getting a hotter than expected inflation number. And more importantly, despite the lack of interest rate cuts in 2024. So all of that, all the repricing and everything, we're still seeing the markets push higher, right? And I laid out two big reasons for that. Number one was the money market funds and all the stocks, basically the cash sitting on the sidelines. A lot of buyers are waiting on the sidelines. They're buying every dip that they can get. That's number one. Number two, earnings season's getting started, and a lot of the pressure is on Magnificent Seven and big tech companies. Expected to report year-over-year growth of well over 48 to 49%. So that is a pretty stellar growth rate on a year-over-year basis. So those are the two reasons why I believed, or I was speculating, the markets are pushing higher on every dip that we got up until now, when there's a lot of macro headwinds such as interest rates, the yields, the dollar index, crude oil prices, interest rates with respect to where market expectations are, and more importantly, inflation. I mean, this was an inflation week. I had a live stream yesterday, I had a live stream the day before, and we got hotter than expected numbers. And we were kind of talking about how this is not good for the market because stickier inflation leads to lack of interest rate cuts, which leads to some repricing in the market, but we didn't really see that until today. And today is the day when we're actually seeing some decent sell-off in the day. So this is what the heat map looks like. It's basically red and of course brutal all around, with all stocks and all sectors selling off. Apple's kind of holding up right now so far on the day. So again, this is the entire market, and you can see that all sectors in the S&P, all 11 of them, are down at least 1%. Utilities down over 1%, with consumer cyclicals down over 2%. In the last 1 week, everything is down except for comm services, which is basically flat. And again, the daily performance, the one single indicator that is up the most, volatility. Volatility, 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 VIX. We've put a lot of emphasis on the VIX recently. We've been talking about this almost every day on our live streams and on our market updates as well. And this is exactly why, if you take one message away from this video, if you simply don't watch anything else, or if you watch a lot of videos, one thing you take away from this video is do not miss out on the opportunities that come your way when the VIX is higher. I'm going to say that again. Do not miss out on the opportunities to dollar cost average and to buy when the VIX is high, because it has always, and again, it's kind of, I shouldn't say always because nothing is guaranteed in the market, but the fact that we've been trading at all-time highs is a clear testament to how strong the performance has been. And every single time VIX spikes, eventually it comes down. Now, whether this 18 level is the peak or if it's going to go higher, we don't know. But the idea is that we need to get ready. We need to get ready. Get your cash ready. Get whatever it is you need to do. Just be ready for when the deals come your way, because markets are selling off. They are pulling back. We're going to go over the S&P NASDAQ in just a minute. Volatility is higher. And this is this is one of those serious buying opportunities playing out in front of our eyes, with the VIX pushing higher, market breadth coming down. There's a lot of stocks becoming oversold. Do not let this opportunity slip up, again, because we don't get them very often. That's the whole idea. We don't get these opportunities very often. And Bill Ackman in this video is simply saying that when, you know what, I'm going to play this. I'm going to remove the sound. We're going to listen to the captions here. I'm going to basically go over the captions. So basically what he's saying in this clip is that people get concerned People tend to get excited about investments in the stock market when they're going up, and they get depressed when they're going down. And that is just inherently human. And that is true. For the longest time, I would say, like since the beginning of this bull market, I've been cautioning people just to understand where we are from a risk reward standpoint, and make sure that you don't over leverage yourself or you don't overdo your investing, and just kind of move in a very steady progress, right? I've been de-risking a little bit. I've been rebalancing the portfolio a little bit. I've been selling calls to potentially hedge this downside. And now when we are seeing that pullback, now I can step in a little bit more aggressively once again, right? With all the cash that I have sitting on the sidelines, I can start to become a little bit more aggressive once again. By the way, all the alerts will be shared in our Discord. So if you want to get access to all of them, links going to be down below. There's going to be 4 channels. US alerts, Indian alerts, Asian market alerts. I actually did pick up some gold as well. I bought gold today. Then we've got day trading alerts, options alerts, trade ideas. Everything's going to be down below. And there's going to be a lot of them that are going to be firing off as volatility continues to push higher. One more thing I want to mention here is that if you go over to the volatility spreadsheet, we've got a specific spreadsheet that members have access to. So this right here is going to be that spreadsheet. And if you specifically go over to VIX summary, what you'll notice is that right now we are at 18, right? So 18 is a level for volatility. We're at 51.58 percentile, right? So what that basically means that we are going to be somewhere over here. So we are at 50 percentile, which is still pretty low. Like if you consider, volatility on a grand scheme of things, this is, by the way, going back, I believe, over 40 years or 30 years worth of data. So 8,514 trading days. So if you do the math, 8,514 divided by 254 trading days, 33 years. So we're basically going back 33 years worth of data on volatility. And what this basically shows us, a VIX as 18 is in the 51 percentile, which is still a normal level. This is still a normal level. It's not until it pushes past 20, or I would say 23. 23 is really that key level where it starts pushing up to that 75th percentile, right? Above 23 is when we start pushing up to over 75th percentile. And then anything above that, we're looking at, 82 percentile, 85th, 90%, then 95, 98. And then look what happens. Up until 47, the volatility is still in the 99 percentile. You double the VIX from that level, from 47 to over 81, and still it goes from 99 to 99.99 percentile. So those are going to be some extremely rare circumstances, and that is, you put your house on mortgage, you refinance it, you get another mortgage, and then you buy like there's no tomorrow, because volatility is extremely high. Markets at that point are probably down quite a bit because of that inverse correlation between both of them. So there is a negative 0.61 correlation between, of course, the S&P and the volatility as well. So the bottom line is, I'm ready. And if the VIX continues to push higher here, so let's say they get up to like 19, 20, preferably over 23, 24, that's going to be some pretty good buying opportunities for us. And the next target is going to be closer to 36.40. But then again, a lot has to happen. A lot of bad things have to happen for the VIX to get up to over 36, 37. So I'm not expecting for the volatility to get up to that level. But this level is still realistically possible. That's going to be sitting at 23. And that was the last time we actually experienced that back in October, which again was another very serious buying opportunity for the market. Now coming over to the S&P 500, so this is the chart. So if you come over to the 30-minute, we talked about how there is a big resistance at 5,220. Yesterday's rally was a pretty good reversal back higher, but we specifically talked about how that is going to be a resistance to keep in mind for S&P. And of course, if we do end up, let's say, breaking down, then that is a resistance, that is a rejection again, and we're making a lower low. So this again, yet again, confirms a lower low for the S&P 500, just continues to prove that there is weakness, there is a downtrend in play, there is lower highs and lower lows, and the buyers are not really present that much. NASDAQ, I would say same thing, a huge reversal, although it did kind of push higher yesterday very strongly, and we talked about how this is going to be a huge area of resistance. This was discussed in my yesterday's market update video, and 16,485 getting rejected again, huge gap down, selling right back down. And a really important thing for the NASDAQ is to hold this level, and that's going to be at 16,100. If it continues to manage some type of support here at this level, there's hope. If it breaks down, I think there's new lows incoming for the NASDAQ as well. So bigger sell-off and newer lows for the NASDAQ are possible in case we get a breakdown below 16,100. And a lot of the times when I talk about, potentially breakdowns and lows and sell-offs, some people take it in the wrong way and they think that, this is just another FUD, or, we're waiting for a crash. I'm a bear. Caddy's a bear. He's expecting a crash. No, I'm telling you, these are good deals. Like, this is quite literally the time to be getting ready for potential deals and opportunities to be a buyer long term. Because the VIX is high, markets are selling off. That's when you need to get excited. That's why the Bill Ackman clip comes in and he's talking to people. Like, he's telling people that, you need to get more excited when markets are down, and you need to be more cautious and more alert when the markets are higher, because that's how risk and reward works. Your future returns are solely dependent on where you buy certain stocks. Price determines future return. Always remember that. So moving over to Apple, and Apple here pushing higher yesterday. Even on the day, it's kind of surprisingly well, right? So it's holding up because I think institutional involvement's been a little bit better for Apple more recently. So we've seen a lot of momentum for this company. Of course, yesterday pushed up over 4%, back up to almost $2.8 trillion in market cap. And of course, on the day right now, I don't know what happened here, but I feel like my internet is not working. So okay, so I'll have to figure this out because I am at a hotel room right now. There we go. I think it just loaded up again. So let me just pull up Apple here. There we go. So okay, so Apple pushing back higher very, very nicely. We talked about this as a trade idea, and it's still doing well. I mean, the high for today was 178. This is still going to be in play. 199, close to $200, still going to be that resistance to keep in mind. Amazon, on the other hand, pulling back, rightly so, because it was at a resistance. We talked about this. Target was 188, 189. It hit a new all-time high yesterday, which is fantastic, but it's now starting to pull right back down. Support level is going to be staying put at 178, 179 for Amazon. Talking about Tesla, and Tesla here consolidating sideways, so nothing's changed from yesterday's analysis. Just moving sideways here. Resistance is going to stay put at 177 with a support level that's going to stay put roughly down to 153 for Tesla. Talking about NVIDIA now, and NVIDIA also just consolidating sideways, so not really going anywhere, down about 2.7%. Support level is going to stay put at $845, and resistance all the way up to $971. Lots of consolidation sideways in that range for NVIDIA. Advanced Micro Devices getting a bit of a breakdown, I would say. So breaking down below 163, 164. So definitely seeing some weakness right now. And the next support and target is going to be down to 149, 150. So this right here is going to be that level to keep in mind for AMD. And resistance is going to stay put all the way up to 183 for Advanced Micro Devices, right? So a little bit of a potential breakdown happening here. Momentum is definitely not in the favor of the bulls right now. And next target and support is going to be in the 150s for this company. Talking about PayPal, and PayPal here underperforming on the day. So definitely selling off down about 2%. Next support is going to be alongside those moving averages. So the 50 SMA, the 200 SMA, those right there are going to be some support levels to keep in mind in the $61 to $62 per share level for PayPal, and resistance all the way up to $68 per share, kind of aligned with this red rectangle for PayPal as well. Talking about Visa, a little bit of a pullback, consolidating sideways at that support at 273, 274, all the way down to as low as 249, 250 for Visa, and a resistance and a target, of course, back up to $290 per share for Visa. Talking about Meta Platforms, and Meta here also pulling back. Of course, the entire tech sector is down, so Meta's down about 2%. And next support and target is going to be inside this green rectangle, setting between 455 and 475 for Meta. So that is going to be that level to keep in mind. Talking about Netflix, and Netflix also pulling back, very similar to Meta. It's been on a very nice consistent uptrend, consolidating sideways for the last couple of weeks here. Support level is going to stay put at low to $600, aligned with that 50 SMA for Netflix as well. Google's been on a very strong rally, so rightly so, it's pulling back about 1%. Very, very overbought, so there's no doubt for a potential correction in Google stock here, considering how much it's already rallied, and of course trading at all-time highs at the moment. Talking about Microsoft, and Microsoft here also starting to see some consolidation, holding up really well. I mean, only down 1.4%, and this right here is going to be the most important support level to keep in mind for Microsoft. And then finally we got Enphase and Costco. Enphase here selling off about 4%. It's really been choppy in terms of the price action, so lots of consolidation for Enphase as well. Support level is going to stay put roughly down in the low 100s, so 108, 109, some levels to keep in mind. With Costco pushing slightly down. I mean, it's done really well compared to the markets right now. So 731 is where it's at. Resistance is going to stay put at 750 with a support level at 729. So hope you all enjoy this video and a complete update on the markets. We did really have a lot to unpack in this video, so it's going to be a little bit of a longer one. So again, thank you so much for joining. Really appreciate you. Make sure that you drop a like and subscribe to the channel if you haven't already. And again, do join our Discord if you want to get access to all the alerts, all the ideas, limited spots left. I've opened up actually a couple more spots this morning for people who want to join and get access to the early beta launch for the MoneyVest platform. And of course, all the Discord channels, including trade alerts as well. So as always, happy investing. I'll see you all in the next video. Take care.